We're going to talk about this lesson. It's on page 68, Taxes and Investments, Part 1. And the first thing I'm going to do is just read this for us we're going to read it. So works full-time at Starbucks while attending college with a recent raise of $15 an hour. She makes $30,000 per year. She pays 4% of her salary to a Roth IRA investing account. Because Starbucks matches up to 4%, this account averages about 11% per year, and she contributes twice a month. She'd like to purchase a $200,000 home at a 3.6% APY with 3.5% down using an FHA loan for 30 years. She currently has about $1,500 a month of expenses, and Starbucks pays her back for college. Using the table and this information, answer the following questions. All right, so that's the first step. Let's read the questions that we need to answer. And we'll go back and highlight the information that's important after this. So number one, how much does Sarah pay in taxes for the 21-22 tax year? It says to use the table, and we do have a table here. All right, we'll go back to that. Number two, when will she have enough saved for a down payment? And three, how much does she have in her investment IRA after 1 year? And lastly, if her current rent is $800 a month, is her mortgage going to be more or less than what she currently pays? All right, so those are the questions that we need to talk about: taxes, savings, investment, IRA, and then the mortgage. So let's go back and look at some of this important information, right? So you should have some stuff in mind in your head about what is important, but $15 an hour. I'm not going to underline that because it's probably a little bit easier since I also wrote 30,000 a year. We'll use that. 4% of her salary goes into a Roth IRA investing account, and Starbucks matches 4%. We'll talk about that in a bit. This account averages 11% per year. Okay. And she contributes twice a month. And for the sake of this problem, we're going to assume that this is how it's compounded as well. So we're going to convert that 11% into twice a month later on. All right. She'd like to purchase a $200,000 home, 3.6% APY, 3.5% down. And it's a 30-year loan, and she has $1,500 a month. And then again, same thing for this sake of this problem, we're going to assume that that the expenses of $1,500 a month include all of her expenses, her rent, her investing, everything. Even though investing is not really an expense, we'll just assume that to make this problem a little bit simpler. All right, so now we've got this important information underlined and pointed out, we can use that to reference this, and so we can begin to answer these questions. How much does Sarah pay in taxes for the 2021-2022 tax year? We're going to use the table. So how do we determine taxes? Well, first we need to figure out, how much does she make? That's what's going to determine that. And she makes $30,000 a year. It's a weird three, whatever. Now let's go look at this table. This is how US taxes work. It's a little strange, but basically the idea is if I make $100,000, I would fall into this tax bracket, right? If I make 100,000, but this is a little misleading. I'm not actually taxed 24% at the $100,000. All right. That's not how it works. I'm taxed at 24% over the amount that's listed here. All right. So this is called a graduated income tax. And so what we want to do is find, okay, which one of these brackets is where Sarah is, right? So $30,000, is it from 0 to 9, 9 to 40, 40 to 86, and it's here, right? So this is the bracket we need to pay attention to. And so all we need to do is follow the directions that are there, and that'll help us figure out how much taxes she owes. So I'm going to take a screenshot of that, and then we're going to keep cruising, paste it in here to make it a little bit easier on us. All right, it's pasted. So she makes $30,000 a year, and we need to follow this rule. The rule says it's going to be $995 plus the amount that's over $99.50. So we're going to take 30,000. And what's the amount over $99.50? Well, it's the amount that we get after we subtract $99.50 from 30,000. So do that subtraction. And you should have gotten 20,050. So that's the amount over 9,950. And it says it's 12% of that amount, right? So now we're going to take that $20,050 and we're going to multiply it by 12%, which is 0.12. And that's going to give us the amount we need to add to 995, right? So we just follow the rule and we'll be good. All right, so when you do that percentage, what did you get? Cool. Yeah, I got 2406. So we're going to add that to the 995. Whatever that amount is the amount she's going to pay in taxes every year. So as we can see, she ends up making, or not making, but having to pay $3,401 per year for her taxes, right? So that is the taxes she's going to pay. It's as simple as that, right? It's a little weird, but that's as simple as it is. All right, so that's the first question. All right, let's move on to question 2. When will she have enough saved for a down payment? What's going to affect what's going to affect how much money she has saved? Well, there's 2 things we need to consider. All right, we need to consider the taxes we just took into account, and we need to consider her expenses. And those are the things that we'll take from her income, right? So we're going to start with her 30,000. We're going to subtract her taxes. Because we want to know how much money is she able to save each month, right? So let's start with that, get that done. We got 26,599. The next thing we want to take into account is her expenses. And if we look back at her expenses, it says she has $1,500 a month worth of expenses. All right. So she's spending $1,500 a month. And I did this video a little bit different in the previous version, right? But the reality is that taxes are taken out of your paycheck. And so this is a little bit more accurate in terms of like how she would be spending money and seeing her money. She really actually only has access to 26,599. She won't have access to that other money ever, right? The 3401. So this is a little bit more realistic. So let's do it this way. Anyway, $1,500 a month. How much would that be per year? Well, we can figure that out by doing 1,500 times 12. It's going to give us $18,000. Let's subtract that 18,000, and that'll give us her leftover money, right, that she would have access to. About 8,599 per year. And so now if we want to know when, well, she'll definitely have the money saved for a down payment within 1 year, which I happen to know because I know how much she needs. We should do that too, though, huh? So let's go back and figure out how much money is she going to need for a down payment. What's the information that's relevant? The information that's relevant is this $200,000. That's the home she wants to buy. She wants to put 3.5% down. All right, so that's a simple calculation. Let's do that down payment here. What's the down payment going to be? It's going to be 200,000 times that 3.5%, right? That's the money that she needs saved. Probably should have started there. That's fine. That's the money she needs saved. So do that calculation. And what did you get when you did that? You got $7,000, right? So obviously she's going to have the down payment within a year. So just after a year of working, she can put a down payment on, and maybe she'll be able to afford it. We'll find out a little bit later in this problem if she can or not. But Well, let's figure out how many months away is that, right? So let's go ahead and divide this 85.99 by 12 to give it the monthly amount that she has left over, right? So she has money that she's bringing in, right, every year. She's paying taxes on it, and she's paying expenses like her rent, her utilities, internet, phone, all that stuff. She's spending $1,500 a month on that, and left over at the end of all of that is $8,599 per year. So to find out per month, we just need to divide that by 12. That gives us 716.58. 716.58. All right, so let's just take that 7,000. What are we about to do? Well, we're about to find out how many months does it take to save that much money. Now, to be smart, right? We want more than the down payment. We don't want to spend $7,000 on the down payment and then have no money left over. That's not a good idea. But just, you know, for the sake of this problem, how many months would it take? We'll take that 7,000 and we'll divide it by the 716.58, and that's because that's how much money we're saving per month, and that's going to tell us how many months it'll take to get that 7,000. And when we got that calculation, or when we do that division, we're going to get that it's 9.77. I rounded months. Okay, 9.77 months. That's about how long it's going to take to get that. It's exactly how long it's going to take to get that down payment. Right, exactly. All right, cool. Let's keep moving. All right, we're going to look at problems 3 and 4 in a subsequent video. All right. Otherwise, it's going to be wildly long this time. What I want you to do is to complete problems 1 and part 1 of 2. So the things I've underlined, here's the question. This is your homework problem. It's on page 69. Bob got a raise 2, makes 30,000 a year. I'm just going to read the numbers: 15,000, 8%, 4% matching, 1,850 per month, 1,000 per month. Also grows 11% year. He's going to buy a 20% down house, 3.3% APY across 30 years. And it doesn't look like this problem has enough context, so let me add that in. His house that he wants to buy is 250,000. I don't see me writing that price in before. It's kind of important. All right, so you're going to need that information. You're also going to need this table. So pause this. That table is going to come in handy for problem 2, and we'll pick up part 2 of these notes later.